What's up everyone, it's Karthik with MoneyVest. So in this video, I wanted to discuss three stocks: Tesla, Palantir, Nvidia. I'm going to break down exactly what their performance has been over the last 1, 3, 6 months and year to date, and also go over the insane valuations that these companies are now trading at. Now look, these three stocks I personally own, and our community is really big on Tesla and Palantir, Nvidia, SoFi, some of these companies. But I think at some point we have to be very objective and try to understand how crazy this actually is, because this market has certainly gotten out of hand. I mentioned this in my yesterday's market update, and it's gotten to a point where these valuations just do not make sense anymore. Regardless of whether you own them or not, I think we have to take a very objective overview of these companies and where they're trading. And these are just three of the many companies out there in the market, especially in technology, semis, and just consumer discretionary and communication services in general, that are trading at very, very rich and expensive valuations. Now, the markets as a whole may not seem like a bubble territory. The markets as a whole may not seem like we're trading at a level where the bubble is about to pop and we're going to burst. Why is that? Because of the aggregation of all these valuations. So what I mean by that is, while you might still have Tesla, Palantir, Nvidia trading at these insane price to sales and price to earnings multiple, on the other spectrum, you might have a lot of companies underperforming, selling off, not doing as well as these sectors and these stocks, and trading at really cheap and discounted valuations. So when you take the average, it averages all out at around 24, 25. So in the mid 20s, low to mid 20s. And so when you look at it from an aggregate perspective, you might feel that the markets in general are very reasonable. They're not cheap. They're certainly not rich. They're not in the bubble territory. They're kind of reasonable. And that's exactly what Professor Demodran also mentioned in his update with CNBC. The markets right now are rich, but they're not in a bubble territory. But I really want to focus on the top 1 percentile of stocks that are trading at these valuations, which is, of course, the big three, the big, best performing stocks here: Tesla, Palantir, Nvidia. So if you take a look at these year-to-date gains for these three stocks, I mean, Tesla is now up over a 90% after just an astronomical parabolic rally. I mean, I'm still shocked by seeing it in the 470s. I mean, if you come over to where it's trading right now, you've got Nvidia at around $128. This is actually one of the stocks that's been selling off. Of the three, it's been the worst performing. If you come over to Tesla, 475 just printed. That's where we are. And Nvidia here, 128. And then, of course, Palantir right now is sitting at just under $74 per share. So if you take a look at their performance in the last 6 months, I mean, Tesla, Palantir have more than doubled. They've almost tripled in some cases. Nvidia here is the only one that is the big underperformer, down 8%. In the last 3 months, again, Tesla and Palantir have both doubled, over 100% gain. Nvidia is up a modest 11%. And in the last 1 month, Tesla has been the best performing stock, just post-election, after Trump winning the election. That's just, made the stock just catch on fire and basically go up to new all-time highs at 475, which is where it's trading at the moment. And Palantir 20% up. Nvidia is, like I said, the worst performing stock. Semiconductors have just been in a lot of pressure lately with a lot of these sanctions and restrictions and potential trade wars with China. So there's a lot that's going on over on the semi side. Now, the valuation, right? So our channel has very much been focused on valuation, having a very objective look on the company's valuation and where it's trading. And by no means I can sit here and justify these valuations. Look, like I said in the early beginning of the video, I own all three, right? But I can nowhere sit here and tell you that this is reasonable. I mean, Tesla at 15.3 times sales, right? Palantir at 62 times sales, and Nvidia at 27.7 times sales. So just think about it this way. If you run a company, right? If you run a company and you basically do, let's say, $1 in sales, right? I don't know what you're selling. Let's say that you're selling paper clips, whatever, and you're selling $1 worth of revenue. That's your revenue per year, $1. That's it. And your company is somehow valued at $62 just based off of that $1 revenue. And that in itself, in a nutshell, is what Palantir is valued at. Now, of course, there's a lot of untapped, intangible potential that's being priced into the company, right? Because investors right now are willing to pay 62 times for every $1 of revenue. That's what it feels like right now for Palantir. And for Tesla, investors are willing to pay 15 times every $1 worth of revenue. So those are some very, very expensive, well, I should just come out and say it, like it's like bubble territory valuations. Now, I don't know who's on the other side buying these stocks. Like, it's getting to a point where it's, I have to ring the register a little bit. I have to be very cautious. I've been selling calls, so I've already sold calls on Tesla. I just sold a call on Palantir this morning, and all my NVIDIA shares have calls against them. So if it continues to drop here, I've got 6 calls that I've sold on NVIDIA that expire at the beginning of next year. So I've actually got protection for all these 3 positions. So why? Because it's gotten to a point where it's actually scaring me. Price to earnings, you got 140 times on Tesla, 157 on Palantir. These are all forward multiples, so we're talking 2025 estimates. And NVIDIA is probably the only one that is trading at a little bit of a reasonable valuation on a price to earnings basis, a little bit under 30. And that's after it's been selling off. It's nowhere near close to its all-time highs, but these 2 stocks are. So, I'll let you decide what is okay for these companies. I mean, Tesla's still running on this momentum, which is great. I mean, I've got calls all the way up till $800, $850. But I just want to be a little bit of that voice of reason and objectivity here that, if you're watching this video and if you're brand new to investing, if you're just getting started, just understand that these valuations are indeed insane. This is not the norm. This is not what we're used to seeing. And when the market gets incredibly greedy and euphoric, this is what ends up happening, right? I mean, it's the race to the top. Basically, everybody's just buying, hoping that someone else is going to come around to pay them a little bit more. And that's the greater fool's theory, right? You just buy and hope and pray that someone else is going to come around and pay you a little bit more for it. And at some point, the music stops and this eventually ends. And we all know that. Because I've talked about this, over the last 5 years that I've been doing this on YouTube and 10 years that I've been investing in the market. I've seen this over and over and over and over again. I've seen this multiple times. And that doesn't mean that this is going to lead to a eventual significant crash or huge profit taking where these stocks are just going to get dumped like 60-70%. Nothing like that, although that might still be a small possibility. But I think a correction or a pullback is still in order, just considering that the insane valuations that these companies are trading at. Now, you also have to understand that it's going to be that much difficult for these companies to live up to those valuations. I mean, for Palantir to basically just stay where it is right now, right? If the price were to stay exactly where it is right now, for Palantir to cut this price of sales from 62 down to 31, what needs to happen? It needs to double its revenue, right? So it needs to 2x its revenue. Top line revenue needs to go up 100%. Just so Palantir can cut this price of sales multiple from 62.5 down to 31.2. And that's a very difficult thing to do. And same thing for Tesla. I mean, if it has to cut down on its price to sales multiple from 15 down to 7.5, which I think is a lot more reasonable number even for a tech company. Even if you're pricing Tesla as a tech company, I think 7 to 8 is a lot more reasonable as a price to sales multiple than 15. 15 is more software. 15 is now you're trading like Microsoft. Microsoft, a pure software play, and Tesla's not a software play. Yes, you can make a case that, okay, software, you've got end-to-end neural networks for Cybercab and for FSD, but at the end of the day, there's still a primarily dominant hardware company that's producing and manufacturing vehicles. And even if they were to license their software out to other companies, that still is not going to be, in my opinion, still demanding of a 15 times sales multiple. So in order for Tesla to, let's say, live up to these expectations of 15 times sales, they have to, in other words, everything else being equal, have to more than double their revenue over the next year to cut down on their price to sales multiple down to 7.5, which in my opinion is a lot more reasonable considering where we are. There's really only 2 ways to let's say, lower that multiple. Because if you think about this ratio, price over sales, what is in the numerator? Price. What is in the denominator? Sales. So in order for this multiple to either come down, either price has to come down or sales has to go up, or both have to happen at the same time. And so if price keeps going up what has to really increase significantly? It's the denominator, it's the sales, it's the revenue for the company. Same thing is true for earnings, right? If Tesla were to eventually trade at, let's say, 60 or 70 times earnings, earnings have to more than double from here. Same thing for Palantir. I think Nvidia is still fairly priced here at 29.5 times forward earnings, but price to sales has almost always been an expensive valuation for Nvidia. So look, I'm not gonna come out here and start bashing these stocks just because of the valuation. They're phenomenal businesses. They're fantastic companies. I mean, I own all three of them, but I'm just here to kind of help you understand the market momentum, the greed, the sentiment can really push the valuations to just irrational levels and places where it's very hard to justify those prices. So just be careful out there. Certainly look at it from a more objective standpoint. Don't marry a stock, don't marry a company, because at the end of the day, like, we're here to make money, and once we've made our money, we have to move on to something which is going to be the next big opportunity. So, be safe out there. There's definitely a lot of greed, and I just really want to come out here and be the voice of reason. So hopefully you can appreciate that. Make sure that you drop a like. Tesla, $483 is up another 4%. Like, what is going on? I'm loving this, but at the same time, I am scared. I'm scared because this is just getting too out of control with the Tesla $1.55 trillion valuation. Like, every day, it feels like 4%, 5% is kind of like the norm, and it shouldn't be. It really shouldn't be. It's giving me 2020 vibes, and that's not good. So, again, be careful out there. Hope you all enjoyed it, found it helpful. Make sure that you drop a like, subscribe to the channel. Again, link's going to be down below if you're interested in joining us and be a part of our MoneyVest community. As always, happy investing. I'll see you all in the next video.